And also, Rebecca, you'll need to resend that link because only the people who are here when you copied it in will see it. Well, hello all, welcome. In case your brain isn't full and totally overwhelmed from 2 days ago, we're going to do it all over again. Great to see you, Frankie, Greg, Gretchen, John, Mark. Before we get started, I was just curious, do folks have some lingering questions from last time? We're going to go ahead and get started. I want to review the chart of accounts again, but today we're going to talk about getting started in QuickBooks. And I just wanted to check in to see if folks had some questions about, bookkeeping principles and concept that we talked about last time. How are folks doing? Gretchen's good. John's addressing.
I had another question also with QuickBooks, and you briefly touched over it, but it was bringing in your bank information and then also having Square and QuickBooks payments and having the possibility of duplicate revenue.
Yep.
So yeah, just expanding on that.
Yep.
I think it's happening for sure.
Yep, and I think I think those two questions that you asked earlier about the Square deposits and the bank feed, it's all connected, and we'll talk about it next Tuesday. So yeah, we will get there because I think it troubles a lot of people. I think I saw a thumbs up from Frankie, and hopefully Greg's okay too. So we'll go ahead and get started. So today we're going to talk about the goal. We're going to review the chart of accounts. We're going to talk about how to navigate QuickBooks, and then we're going to go over some basic transactions. I know for some of you, it's, you're just getting started, you have zero QuickBooks, and some of you are, a little more experienced, but I think it's probably worth the review to make sure that, you're getting the transactions in correctly. So when we talked about the chart of accounts last week, or not last week, 2 days ago, we talked about what not to do and, how it's easy to set things up according to the Schedule F. But if you set things up according to the Schedule F, you don't necessarily get the nuances that you'll want out of your reporting. So oftentimes we'll look at reports, we'll look at things as a percentage of revenue. And if you, don't separate out your production revenue from your, grant revenue, or if you rent out an apartment, all of your numbers are going to be a little bit skewed because you're sort of looking at, your operating expenses as a percentage of a distorted number. So it's helpful to sort of, keep clean, what's going to be your operating revenue and operating expenses from other things that go on that you still want to record. Also, you want to think about how your expenses impact the business and how you want to consider them. We want to think about our direct cost of animals together. We want to think about production together. And it doesn't necessarily align with sort of those traditional ways that we think about it. So I want to encourage you to rethink how you group things together. So old thinking, traditional thinking, you're going to be like, oh, insurance, and I'm going to glom together insurance into one category. But, we've got workers' comp and liability insurance or vehicle insurance, which are very different, changing and adjusting differently. Likewise, we have different kinds of supplies. We've got selling supplies, we've got office supplies, we've got production supplies. So I want to encourage you to think, about the way your business operates and not necessarily, sort of this, I call it old thinking. So grouping together production costs, payroll costs, overhead costs, and I call them, the parent companies and the children companies, and we'll talk about that when we review the chart of accounts. Does this new thinking make sense to folks? Can you think of an example how you might recategorize some of your accounts in QuickBooks or in your Excel spreadsheets? Okay. So when you look at your chart of accounts, the chart of accounts is going to be, what is going to show up on your reports. So these names are what is going to show up on your reports, and these are going to be the buckets. And the account type is where it's going to be. So for example, an expense will be on your income statement, an asset will be on the balance sheet. So if you categorize something as an asset, you're not going to see it when you run your profit and loss. In QuickBooks Online, which those of you who are currently using QuickBooks, you're all using QuickBooks Online. So I just wanted to, share the differentiation between the chart of accounts in QuickBooks Online versus the desktop version. This is a screenshot of the desktop version, and this is a screenshot of the online version. So we have the name and the type, and those are, the same. The name is what's going to show up on your reports. The type is going to be where it's on your reports. And then QuickBooks also has the detail type, which is a third layer of classification, which you are required to enter in. It will not let you ignore it. But I really don't know what it's doing for you. I just know that you're supposed to fill it in. So when you're thinking about recategorizing things in your chart of accounts, don't worry about the detail type, focus on the type and the name. Does that make sense? Are folks clear on that? So, where the type of account is going to determine where things show up. So, we talked about wanting to keep that top line revenue clean, and we want to really see, what are we doing through the primary use of our farm, whether it's growing lavender or raising livestock or flowers or vegetables or meat. What are we doing through the basic operation of our farm? And this is going to be our gross sales, and the account type for those types of revenue is going to be income. If we want to have our cost of goods sold, our cost of production, that account type will be COGS, and that will show up here. Account type of expenses is going to show up in this section, and then we have sort of the operating income. So if we keep all the basic farm revenue and expenses as income, cost of goods sold, and expenses, we're going to have a really clean snapshot of what our business is doing. We can still capture all the other details that go on that we need to capture, but we'll call the account types other income or other expenses.
Hey, Julia.
Yeah.
I'm wondering, Julia, if maybe you could
Yes.
turn your video, because we're getting some choppiness. I don't know if everybody else is hearing that.
Yeah, it's pretty bad on my end.
Hang on a second.
Yeah. So maybe losing the video would help.
Is this any better? Can you guys hear me better?
It just happens every so often.
Okay. Well, I guess the reason why I'm asking is I realized I had the wrong network connection, and I'm wondering if it's better.
It does sound good.
Okay, because I just moved my office like 3 days ago, and so my computer is defaulting to my old network, not my new network.
Gotcha.
So,
yeah. Okay.
So hopefully this is better, and please interrupt me if it isn't.
Okay, I'll let you know. Thank you.
Okay, sure.
Hey, Julia, can you go back to the previous slide for a second?
Yeah. Is this one?
Yeah, I have a question. What's the difference between operating income and revenue?
So operating income is revenue minus all of the expenses. So it's what you have left over. It's not quite, it's like, think about it as profit, operating profit.
Okay, I was conflating income and like money coming in. So.
Yeah, and and it's funny, I've had this conversation with a colleague of mine. Income if you're working for somebody else and you have income, that's, what your paycheck is. Your gross income is what your paycheck is. But in the business sense, it's, revenue and profit, or in operating income. So the income is what's your profit. Net, and you'll see net income or net profit as the quote unquote bottom line. So I'm glad you asked. And, this is where QuickBooks and accounting in general can get really confusing, because if you're talking about income in a personal sense, it's different than income in a business sense. So great question. Any other questions?
You mentioned other expenses.
Yeah.
What would go in there as opposed to
Operating
operating?
expenses? Yeah, so you might have interest expense from loans. You might have an apartment that you rent out as part. If you have an apartment and it's not part of the farm, but it's income, you might have things going on with the apartment. I'm just
not anything directly related to operational. Okay, that makes sense.
Yeah. So just, there's always that sort of ancillary stuff. And, I could argue that depreciation is part of operating expenses, but, I go back and forth about where I think depreciation should be. And I know you had expressed, was it you, John, who talked about your friend who sort of got screwed over because of how they thought about depreciation, or was that somebody else? Can't remember who.
It wasn't, but I remember hearing that last time.
Yeah. Or maybe it was Greg. So these are the account types. So we have income, expenses, other income, and other expenses. And these are the account types that will show up on the income statement. And then the account types that show up on the balance sheet are going to be fixed assets, bank accounts, loans, credit cards, equity, and so on. So what's in gray is the account type, and that I put in green or in red if it's actually a liability or an asset. So on your balance sheet, your balance sheet is a listing of what you have and your liabilities associated with those assets. So just as sort of a reminder that a loan is a liability, a credit card is a liability, a bank account is an asset. It's cash money that you have. So that's an asset. So when you set up your chart of accounts, we can set them up by either sales channel or products. So for example, you can't do sales channels and products at the same time. As an example, if you sell beef at the farmer's market and wholesale, do you categorize it as beef sales or do you categorize it as wholesale sales? So you can see that there's sort of this disconnect by trying to do both at the same time. So you need to kind of decide what structure you're going to follow, whether it's sales channel or products. I personally suggest that you do your revenue streams by sales channel, by where you sell them. And next time we'll talk about using classes. And classes are a way to capture that second detail so that you can say, here are my farmer's market sales, and at the farmer's market I sold beef, dairy, and vegetables. So for your income statement, you have to choose one or the other. On the expense side of things, I recommend parent categories of cost of goods sold, direct operating, payroll, general and admin, repairs and maintenance, occupancy, and one-time expenses. We talked about this last time. So those are sort of the big groupings. And then everything else will get nested underneath one of those 6 or 7, I always lose track of how many, 7 categories. So seeds and seedlings would be a sub-account of direct operating. Fertilizer would be a sub-account of direct operating. Salaries and wages would be a sub-account of payroll. And liability insurance would be a sub-account of general and admin. So you can, have as many accounts as you want, but just think about nesting them underneath the parent category so you can really see in a quick snapshot, what are your operating expenses? What is your overhead? What is your repairs and maintenance? So that's how I always recommend doing things. I want to say that there's no one right way. And the folks at Kitchen Table Consultants have you folks heard about Kitchen Table Consultants? We're good friends, and they set up their parent categories a little bit differently than I do. And this is their system. We have lively debates that usually involve bourbon, not red wine, but we definitely have lively debates about how it should go. I'm firm in mine, but this is how they do it. I wanted you to just see another example. So when you're setting up your account, you'll see you have the account type here, which is, where it's going to show up. You have the account name, and that's actually the child category. And then you have an option to click, it's a sub account of direct operating. So you can sort of, every time you create a new account, you can always make it a sub account of one of your 6 parent companies. There's also, in the desktop version, you do not have this in the online version. It's called tax line mapping. And you'll remember from last time I talked about how there's bookkeeping for filing your taxes and bookkeeping for managerial purposes, so making business decisions. So everything I'm talking about, how you set up your chart of accounts, is so that you can make informed business decisions. So you can really see how your numbers are shaped by your business operation. And this tax line mapping says, well, every time I hit seeds and seedlings, where does that go on my Schedule F? Or where does that go on my Schedule C, or whatever tax return you file, so that when you run you can still run your Schedule F without losing the robustness of the account names that will be meaningful for you. Does that make sense? Okay, Kara's with me. How are the rest of you folks? Good. So this is what it looks like when you create an account in the online version. So, we have the children account, which is the name. We have the sub account of maintenance and repair, the parent category. We have the account type, which is expense. And this detail type right here, again, you got to fill it out, no idea, but it's going to force you to put something there. So just wanted you to be aware of that, where it shows up a second time. Whew. Questions? Does this feel like a review or reinforcement of what we talked about 2 days ago?
Yeah, and more depth, which is nice.
Oh, good. Greg, question.
The accounts and sub-accounts, are those like defined on the fly, or do we define them in advance, or?
Yeah, so that's a great question. I think, I know that when people first get started in QuickBooks, there's a interest in getting all their accounts set up, right from the get-go. But as you go along, you're going to think, oh, I want this account or I want that account. So I would recommend that when you set up your QuickBooks for the first time, you set up your 6 parent categories, and then as you create new accounts, nest them underneath those various categories as you sort of see what you're spending money on. I think you said you're already in Excel or Google Sheets, so you may already have a sense of what categories you're using, so you may want to start building your chart of accounts. But you can also create them on the fly as you go along. You might be entering in a bill and you're like, oh, I don't have an account for weed block, so I'm going to set up a new account for weed block. Does that answer your question? Any other questions? Oh, taking a question break. So last time we talked about the 5 rules of bookkeeping, and there was one that I didn't cover. I wanted one more rule that I wanted to talk about, but we talked about garbage in, garbage out, making sure that you take care to get quality transactions, quality data entry into your QuickBooks. You're the boss, so make sure that the account settings that you use make sense for you. be consistent in how often you enter things in, also be consistent in how you categorize things. Don't get frustrated by accountanese and QuickBookies. They are different languages. And, you know, so we're going to there are a lot of instances where what we think of as English is really not what's true in QuickBookies. And also to focus on the managerial decisions. So don't get too caught up in filing your taxes. If you've got a good bookkeeping system that's designed for you to make decisions, it's not that hard at tax time to, you know, jigger around the lines to fit things into your tax return. And the final rule that we did not talk about last week that's more directed towards QuickBooks and not just bookkeeping is do not delete. So whatever you do, you know, if you're entering in transactions and you realize you make a mistake, do not delete it, edit it. And I'll give you an example of how that works. So let's say that you create an invoice and then you receive a payment from the customer and then you record the deposit from the customer. And then you're like, oh crap, I made a mistake on the invoice. I delete the invoice, I'm going to recreate it. However, what happens is the invoice is now like 3 transactions back. So if you delete the invoice over here, the 2 transactions that came after it are just hanging out there attached to nothing. And so you're going to just have a mess. So, you know, and obviously I'm going to break my rule a few times over the next few weeks. So, you know, rules are meant to be broken, I guess. But as a general rule, do not delete, because the way the transactions are linked, you'll have sort of dangling participles that don't have anywhere to go. So best to edit transactions rather than delete. When we talked about the key concepts, you know, we talked about accrual accounting and cash accounting. We also talked about everything goes into a bucket. Everything gets assigned according to the chart of accounts. And I wanted to go over a few more concepts with you. And, you know, this is, you know, kind of advanced concepts. And, you know, I'm sort of waffling whether we want to go through this, but I think I want to plant the seed, if you will, about the balance sheet equation, because as you go along and become more proficient in QuickBooks, I'd like you to sort of have that marinating in your mind that you can come back to. And the balance sheet equation is assets equal liabilities plus owner's equity. And assets are what you have, and that could be cash or your, you know, bank accounts, cash, it could be inventory, equipment and buildings, breeding stock. And then what you have and how did you get it? Did you borrow money or did you earn money? So if you borrowed money, you might have accounts payable. You have, you know, your vendors gave you, they sold you things on terms. You may have used your credit card to purchase things. You may have a loan. You may have CSA prepayments or deposits on wedding flowers. So, you know, in essence, your customers are giving you a line of credit by prepaying you for whatever it is. So that's a liability. Owner's equity is what you own. So if you've got cash in the bank, you may have owned it because you had profits. If you have inventory, you may own it because you invested into your business. So, you know, you might see assets minus liabilities equals equity, assets equal liabilities plus owner's equity. And this is the balance sheet equation. This is the balance sheet. So, you know, doing 8th grade math where we subtract the same thing from both sides, we can turn it around and, you know, also see the flip of that, which is, I think, what sometimes people see. How comfortable do people feel with the balance sheet equation? Yeah. Okay, we got one person who's like, yes, I got it. And he's working with KTC too. So that must be it. So oops, yikes, going the wrong way. So I wanted to sort of go through sort of the equity side of things, and where things get sort of brain twisty is that our equity is not necessarily money in the bank. it's, you know, the value of the assets that we own. And our equity in the business goes up when we have profits. And our retained earnings is the accumulated profits that we've had in our business. So every time we have profits, our retained earnings goes up and our equity goes up. And every time we have revenue, our profits go up, retained earnings goes up, and equity goes up. And every time we have an expense, our profits go down, our retained earnings goes down, and our equity goes down. So the reason why I want to highlight this is that, you know, every transaction impacts the balance sheet. And I know most people are really focused on the income statement, but the balance sheet is where you're going to see all the mistakes of your bookkeeping system. And every transaction is going to be impacted by the balance sheet. And along the lines of the balance sheet equation, I call my fourth law of accounting, or Newton's third law of physics. For every action, there's an equal and opposite reaction. So wonky animation, sorry about that. So as an example, if you take out a loan, you have an increase in cash and you have an increase in a liability. You have the cash in the bank from taking out the loan, and you also have a liability. If you purchase a tractor, you're trading in one asset for another asset. So the tractor is an asset, and you have an increase in your that asset, and you have a decrease in your bank account or your cash. If you sell product, you have an increase in your retained earnings because of the revenue, and you have an increase in cash in your bank account. So you have an increase in your assets, you have an increase in your equity. And if you pay down that debt, you have a decrease in your bank account, decrease in your cash, and the liability balance is decreasing. So every action has an equal opposite reactions, and there's always two sides to every transaction. And the way we see this in QuickBooks is if you write a check, you're saying, all right, I'm decreasing the balance in my checking account by $50, and I'm spending it on operating expenses. I'm spending it on supplies. So QuickBooks sort of hides the fact that this is, double entry accounting. Who here has heard of double entry accounting from college? Greg is smiling in sort of a traumatic way. No? I took an accounting class in college, which was 100 years ago, and it made no sense, double entry accounting. And, so QuickBooks has sort of put this beautiful interface around it, but this is kind of the nuts and bolts of what's going on behind the scenes. Any questions? So I wanted to just sort of share with you, and one of the reasons why I'm going through this is one, just so you can see the interaction of the different transactions on the balance sheet. But I find that this can be a framework if you're struggling to figure out how to get something into QuickBooks. I find that plotting it out on the balance sheet transaction can help you sort of think through, how am I going to get this transaction into QuickBooks? So for example, when you start your business, you don't have any assets, you don't have any liabilities, you don't have any retained earnings. When you open your business, maybe you take out a loan and you've got your $10,000 liability, and now you've got $10,000 in cash. Assets equal liability plus owner's equity. If you buy a tractor, you're decreasing the cash and you're increasing the asset of a tractor. If you purchase seeds, you have a decrease in cash, you have a decrease in your retained earnings. When you sell product, you have $8,000 now in cash, so you increase your assets and you increase your retained earnings. If you have depreciation, you're decreasing the value of your tractor and you're decreasing your retained earnings or your equity in the business. And at the end of the day, you have $11,000 in the bank. You've got a tractor that's worth $4,000. You've got a $10,000 loan, and you've got $5,000 in profits, revenue minus expenses. And everything that's going on over here is your income statement. This ending balance is your balance sheet. And the things that go down the left side is your statement of cash flows. And the point of sharing this with you is that, number one, all of your transactions are going to impact the balance sheet. Number two, not all transactions will impact cash. And, as an example, your year-end depreciation does not impact cash. And not all transactions are going to impact your profitability. If you get out a loan or if you buy equipment, that's not going to impact your profitability. So there's a lot more depth of things going on than just, your profit and loss. So how many people are totally lost and confused now? All right, Mark's like, yeah, I'm good. Kara, can you articulate a question of where you're at? Or is it, wow, I'm just so confused, I don't even know what to ask?
No, it's not that confusing. It's just that when you have a sheet like this, it makes it look easy, and it's nice to have the boxes and the little, statement of cash flow,
Right?
explaining it. But it's like, for me with numbers, I have to get in and be applying it to something that applicable to me to wrap my head around it at a greater.
Yep. Okay. And hopefully we'll do some of that today with QuickBooks. We'll sort of go through some examples. Anyone else have a question that they can articulate? Okay. So all transactions can be entered into the balance sheet equation. All transactions must balance. All assets must equal liability plus owner's equity. If you can plot a transaction on the balance sheet equation and see the impact on the financial statements, it'll help you get things entered into QuickBooks. It'll help you sort of troubleshoot how to get things entered in. I assume that you all are stopping me on the way for questions and that I don't need to take these necessarily deliberate pauses. So I wanted to just sort of go over the navigation, and I'm going to try to do both desktop and online, just because I know at least one of you is going into the desktop version and several of you are in online. So I'm going to try to appeal to everybody. We'll see how that goes. But here's the two home screens. Oops. So in the desktop version, you'll have this top ribbon up here where you can get to everything that you need to do. And then you also have this little flow chart that's trying to guide you to the different transactions, whether it's to create an invoice, record a deposit, or write a check. You have the vendor section where you can enter bills and pay bills. You have the customer section where you can create invoices and sales receipts. You have the company section where you have your chart of accounts and items and services. You have the banking section where you can record deposits, write checks, enter credit card charges. Somebody asked about reconciling, and I'm delighted to discuss reconciling in the one-on-one coaching. I think it'll be a bit too much of a beast to try to cover it today or in this section. The online dashboard looks dramatically different. We have the cog over here, and we have the cog is where the settings are. We've got sort of some shortcuts over here in the side menu. We've got the snapshot of things going on over here, bank balances, and then new is where you can enter in all the different transactions. So whether it's entering in a deposit or an expense or a credit card charge, you can find those all under the new. So when you open up the cog, you'll see the account and settings, and this is helpful because you can get to your chart of accounts from here. Also, if you need to turn on classes, we're going to talk about classes next time, but I just want you to know that in the account and settings, this is where you can switch between accrual and cash. This is where you can turn on classes if you have classes. If you want to add me as an accountant to help you with your QuickBooks, you can do that under Manage Users. Your products and services lists are going to be here. Also any recurring transactions. If you want to reconcile, that'll be over here. And under the new, under the plus sign, this is where you can enter in transactions, whether it's invoices for customers, expenses or credit card charges, things with your employees, or bank deposits and journal entries. All right, so that's where sort of things are. So I want to talk about some basic transactions. We're going to talk about cash outflows and cash inflows. And I'm talking about cash flows as opposed to expenses and revenue, because not all inflows or outflows are revenue and expenses. And, you know, we talked about if you take out a loan, that's not income. And if you pay back your loan, that's not an expense. You know, so there's going to be cash flows that aren't necessarily related to revenue and expenses. So for your cash outflows for entering and paying expenses, there's the bill pay function, credit cards, and checks. So who here uses bills? Does anybody use bills that's using QuickBooks? I'm trying to think. Actually, is anybody, I'm trying to think, John's already on QuickBooks. Gretchen, you're already on QuickBooks too. So we got, and then the other three are not. Is that correct? Frankie. Oh, where are you? Oh, there you are. Oh, Frankie's also on QuickBooks. So bills, this is an example of where QuickBookies and English are different. So in QuickBookies, bills are things that you receive and then you pay later. So as opposed to, you know, you get a bill in the mail and you mail it, this is like, I'm receiving it, I'm going to set it aside for 3 weeks and then I'm going to pay it. So if you have credit at, you know, your local supply store, this would be an example of a bill. And by using the bill pay function, this allows you to keep track of who you owe and by how much. Hey, Becky, welcome. I'm going to mute you if that's okay. Just cut on the background noise, but feel free to unmute yourself if you have questions. Expenses are things that you pay right away. You may or may not receive a bill with it, but it's things that you pay right away. So if you use your debit card, that's cash that's coming straight out of your bank account. So even though it's, you know, plastic, it's not credit, it's debit. So it's coming right out of your bank account. It's an expense. If you're paying your rent, you're not getting a notice, but you're still, you know, writing the check to pay your rent or pay employees. Credit cards are, you know, similar to the bill in that you have the transaction that you pay for later, but we just do the functionality of it a little bit different. So you can pay it later and you can keep track of the liability or your credit card balance. So I want to go over this real quick. Somebody have a question? Folks are good? Okay. Is this helpful for folks? People, I don't know if it's just people are quiet today, or I just want to make sure that this is what you're hoping to get. Good. Okay. So in QuickBooks, you're going to have the option to enter bills and pay bills. And the concept of paying a bill is only if you enter a bill. And this is one of the mistakes that people make with QuickBooks, and it sort of turns into a legacy mistake where, you know, they get their Verizon bill and they click on the pay bill function, even though in the QuickBooks sense, it's not a pay bill. And I'm gonna, so you may go, for example, this is the online version, you know, you may go to pay bill here if you get your Verizon bill, but you're only going to pay bill if you enter it first. So in the online version, you'll enter a bill. Ta-da! And, you know, you can say who is your vendor. You can say, you know, Home Depot. And then you can enter in the details of who, see, I think I talked about this last time. Here, see where it says category? This is account. This is from your chart of accounts, where you're going to want to say, this was equipment rental, or this was job materials. So this category right here is the account in the chart of accounts. And you can enter in the bill due date here, or the bill date and then the bill due date. And this is what's going to help you keep track of who you owe, because you can say, I owe Home Depot and it's due on the 29th. And I'm going to say that it was, $68, $69, and we can click on save. So we can enter in a bill. And then when you go to pay a bill, you can see, what bills do you have that are outstanding. We can see our bill to Home Depot is right here. We just entered it in. We can see, what's overdue, and we can decide how we're going to pay for our bills. So the pay bill function is only if you've entered in bills previously. In the desktop version, make this a little bigger. You can enter a bill here, and then you'll pay the bill here. So you enter a bill. Ooh, where did that go? So we can say to the vendor, Home Depot. Oops, not in there. And the amount due was $75. And it was for, can scroll down and select my options. It was for potting or production supplies. I'm going to say it was for production supplies, and I'll click save. And then I can go to pay bill, and I can see, what bills do I have, and which ones do I want to pay. So I think the enter bill and pay bill function is really helpful, but I would caution you, for most farmers, it's not really a helpful thing. It's a lot of work. I'm going through all of this just to sort of remind you, do not use the pay bill function unless you actually entered in the bill. Does that make sense? If you're just writing a check, if you're not sort of going through the enter bill, pay bill, you can just write a check. You don't have to, every time you get a bill, you don't have to enter it and then pay it. You can just go to write a check or enter an expense. So you can enter in an expense or write a check. Both of these functions come directly from your checking account, but one is you're writing a check, and the other is you have an expense. It may be on your debit card, but they both work the same way. So, you can say I'm paying Home Depot. It's coming out of my checking account. Oops. We should probably select a different vendor since we entered in the, so it's coming from our checking account. It could come from our savings account. And we can then say, what is it going for? Disposal fees, $60. So this is just entering in an expense. And in the desktop version, we can just write a check. And if you're using the desktop version, you can use the write check function for, if you're physically writing a check. You can also use the write check function if you're using your debit card and it's coming directly out of your checking account. Questions? No. John.
So, like for these, if we're writing checks, for example, there's no need to create a expense if our banks are pulling in that we wrote the check. You would just, match that with.
Yeah, so you're talking about the bank feed?
Yeah, like under transactions, yeah, banking.
Yep. So, and I just want to clarify that, oops, oh shit. Sorry, I just closed out QuickBooks by accident. I'm gonna have to log back in. Hold on a second. And I didn't curse, by the way. I think you guys just misheard me.
We've heard worse on a few webinars. We had Ellen Polishuk. She took the cake on that one.
Oh, good. I have to say, I've been trying really hard not to curse because there's usually one person who really doesn't like it, and I want to be respectful, but it just doesn't come naturally to me. So, okay, so I just to let you know, in QuickBooks Online, I'm not going to open up a real client account and show you a real farm. And so the sample company that QuickBooks gives me is Craig's Design and Landscaping Services. So that's what we got. So the question that John was asking is that there's the bank feed. And so you can link up your online QuickBooks to the bank, and then it's going to download all the transactions. So it's got 25 transactions that are downloaded. So if you're, if you see an expense here, this is where, John, what you're talking about, where you need to add it. So you don't need to necessarily manually add it, as I talked about, as entering in an expense. You can wait till it comes through on the bank feed. Was that your question, John? Go ahead.
Yeah, so you would only want to do it once. If it's coming through here, that would be duplicating to do it
Yeah,
again.
I mean, well, to be honest with you, I would, and this is, I think, best practices, but you can also tell me to jump in a lake. I would love to see you guys entering in your expenses as they happen, because what happens is, let's say you write a check for $1,000 and you mail it, UPS or the Postal Service, they're still like having issues from COVID. It's taking 2 weeks for the check to arrive to wherever it is, and it sits in that person's wallet for another week before it goes to the bank. And so what happens is, you've written a check for $1,000. QuickBooks doesn't know until it goes through your bank feed. So you're going to sort of look at your banking and you're going to be like, oh, I've got, $1,200, but you don't really have $1,200 because somebody has that check for $1,000 that you need to honor. So, the bank feed only knows what went through the bank. It doesn't know what's sort of floating around. Does that make sense?
It does. Yeah.
Yeah. That happened. Oh, go ahead.
So if we're just adding an expense for that $1,000 check, and once we add it, what do we do with the $1,000 check on the bank feed that comes in?
So then you'll want to match it. So, you'll open it up, and instead of categorizing it, you'll want to find the match.
Right. Okay. To the expense we created. Okay.
Correct. Cool. Any other questions? Mark, you're just smiling, or Mark? No, I'm kidding.
Julia, are you going to go through then?
Checks?
Oh, who writes checks?
Yeah, I can't even remember the last check I wrote.
Oh my God, I write checks all the time. Look at me. I've got like hundreds of checkbooks here. Oh, and I would say that whether you're writing a check physically or not, it's directly coming out of your checking account.
Right.
So, that one of the reasons why QuickBooks Online added the expense as well as the check is that for people like you, Mark, who don't actually write checks anymore, for people like me, I just use the write check function. And both of these are the same. It's, I think the expense is just not going to have an expense number you're not going to have a check number here to fill out, but it's still coming out of the checking account. It might be a debit card. It may be Venmo'd. It's still coming out of your checking account. It's just a matter of whether it's a physical check or another mechanism.
Right, okay.
Can
Sarah.
you show how to do, like, say when an expense comes in on your bank and you want to, put it in the right place, or you want to approve it for it to go into, can you show me that? My bookkeeper's been doing it for me, and I'm going to start doing it myself.
Yep.
And I've gotten rusty. I used to know how to do it, and it's been a long time.
Yeah, so this is, and I'm counting on you, Kara, to be upbeat about the online version, because this is where I'm going to get a little bit negative.
Okay.
I'm just, full disclosure.
Sure.
So what happens is QuickBooks is going to download all of these transactions. So this is, 25 transactions. You can see, for example, John, that, this one has a match. So this might match an invoice, for example. And, a rental, it's going to be like, oh, uncategorized expenses. So you don't necessarily want to just click add. It's like a rental. No, that's not uncategorized expenses. I just purchased a new tractor there. So you want to, if you just click here, it'll open it up, and you can sort of say, what is it going to be? And you can scroll down to your expenses, or scroll up. You can say that it was a rent or a lease. You can say it was travel. You can say whatever it was. Now, if you're like me and, you go to Home Depot, it's like, okay, well, I've got, I got some production supplies. I got some, marketing supplies. I got, things that go into different categories. It's not like just one thing, right? So what you want to do is here we go. So you want to click on split, because you're splitting the transaction. It's not just going into one account, it's going into multiple accounts. Mm-hmm. So you'll click on split, and now you've got, okay, I spent, it was $800. And then, I spent $400 on travel, and I spent, $200 on equipment, and I spent $100 on dues and subscriptions. Oops, I'm short. Let's make that $300. Okay. So then it's sort of, this is the total amount, just to make sure that you've split it out properly. So you can, you don't have to go to one category. And just as a reminder, where it says category here, this is the chart of accounts. This is the account name.
Okay.
So don't be deceived by the category and account are the same, but and then you can click on apply and accept, and then it'll go away.
And then it kind of learns it, right? Like it learns your preferences.
Right. And that's where things get tricky, because like if you go to Amazon, who buys the same thing from Amazon every time? It's like, it's office supplies this time, it's farm supplies that time, and QuickBooks is trying to be helpful, but it's not necessarily the same every time. So you do need to kind of check.
Right.
This is one of the reasons why I'm uncomfortable with the bank feed, is that I think it sort of encourages a level of complacency.
So do you enter it in manually?
I'm kind of a dork, and I do. I am also on the desktop version, not online. So I just do everything manually. If you have like little expenses and you don't enter them in, and you want to wait till they come through the bank feed, that's fine. But if you have like $1,000 check that you write, you may want to enter it in manually to make sure that, your bank balance is accurate.
Mm-hmm. Yeah.
So you have and just so here we've got 24 transactions, and if I go to run my profit and loss, for example, the profit and loss is not going to show those 24 transactions are not going to be here. They're nowhere. I'm not going to see them on my balance sheet as uncategorized bank transactions. they will be nowhere. They're sort of, I don't know, hanging out in limbo. Yeah, so here, Greg, here's operating income here, and here's net income. And then up here, it's income, what I would call revenue. So we see income in 3 different places here. So we just sort of need to look at what, where we are on the income statement, just to make life more confusing. Any other questions? Good.
I just
John?
noticed something with the banking transaction page. Yours looked different and I liked it, but you can change it from business to accountant view.
Oh, yep.
So I think
Yep.
it's easier to look at this way.
Got in the accountant view or the business view?
Accountant.
Oh, okay, yeah.
But either way, there's options if anyone wanted to switch that.
Yeah, business view. Yep, cool. Okay, so we talked about entering bills. So the one thing that we didn't talk about is using the credit card. So so we can talk about, paying a bill from Verizon. We can talk about ordering, if you order weekly from, let's say, Marty's Local to stock your farm's shelf. If you charge $1,000 on your credit card, and if you use your debit card, let's say, to pay for gas. So if we're, so here we're going to plot out transactions on the balance sheet equation. So hopefully this will start to help reinforce, but, you pay your bill from Verizon for your phone bill, it's a bill from Verizon, but it's, just an expense according to QuickBooks. So it's, $100 coming out of your checking account and $100 that's reducing your retained earnings. If you place an order from, one of your suppliers and they only bill you once a month, you're going to have a decrease in your retained earnings, and now you're going to have accounts payable. When you pay the bill from, Marty's Local, you're going to decrease your accounts payable. It's now going to go away, and you're now going to have a decrease in cash. So the expense gets entered here in the accrual sense, and here is when the cash flows. If you charge $1,000 on your credit card for a paper pot transplanter, you'll have the liability, which will increase, and then you have a decrease in your equity because you have the expense. Alternatively, you may decide that your paper pot transplanter is an asset. And so if you have an increase in your liability, you have an increase in assets. So either way, your assets equal liabilities plus owner's equity. It's either happening on the same side or it's happening on the other side. But whether you call it an asset or you call it an expense, it's still going to, Kara's looking. Your eyes are like, oh, I don't know about that.
Looking outside.
Okay. But regardless of whether you call it an expense or you call it an asset, it's still assets equal liability plus owner's equity. And when you pay your credit card, you've already recorded, the expense or the asset here. Here, you're just paying down your debt. And if you use your debit card to buy gas, you're going to just write the transaction out of your bank account as an expense, or, I use the write check function. So you'll see that there's a different icon for entering in credit card charges. So when you enter in a credit card charge, you might say, I went to, I charged, $400 on my credit card for insurance. Oops. Oops. So now we have it on our credit card as $400. I'm not going to hit save. I want to just show you something. If I go to company and financials and I go to my balance sheet, I can see on my credit card, I have a negative balance, which obviously this is not correct, but a negative balance of negative 13,000. So if I'm going to put, I'm going to make this $4,000 so you can actually see the impact. If I'm going to put a $4,000 purchase on my credit card, I can look at my balance sheet and I'm going to be able to see that number change. So when I click save, my credit card balance is now negative 9,000 because I put the credit card charge on it. So I can see that impact on my balance sheet. When I look at my income statement, I can see that I've got that $4,000 expense on my income statement for that check that I just wrote for $4,000. So I can see it, you know, the manifestation on my balance sheet where I saw the changes in my credit card, and on my profit and loss, I see the insurance expense. Now, when I go to pay my credit card, I can write a check, and I can write a check off, you know, it's going towards my city credit card, and it's going to go for, I'm going to pay, you know, $4,000 off of my credit card. So I'm not, when I write a check to the credit card company, it's not going to, you know, insurance expense. It's just going to offset my credit card expense. And when I look back at my profit and loss, it's still $4,000, and my credit card balance just went back to negative 13. Did folks follow along on that? Should we take a 5-minute bio break? And I'm happy to stick around and answer questions, but if folks want to, we'll return at 4:10. Cool. Did you want to ask a question, John?
Yeah. About the negative credit card balance.
Yeah.
Is that right? Having it
Nope.
be negative? Okay.
Nope.
And you were
Sure
saying
isn't.
that? Okay.
So I,
So
you
it's
know,
kind
this
of
is
the opposite with that 4,000 insurance
yeah,
and then
exactly.
payment. Okay.
Exactly. So, you know, maybe I should create a new credit card. I can go to my chart of accounts and I can create a new credit card. The account type is going to be credit card, and it's going to be new zero balance card. I'll click OK. So we could see if I went back to that banking, enter in credit card charges. Let's go back here and let's put this, instead of on our city credit card, let's put it on our zero balance, new zero balance credit card. So you'll be able to see this better. So click save. So now when we go, we see here that $4,000 balance. And then when we go to, yep. And then if we go to write a check, and we can write a check and it pays off our new zero card, the new zero balance card, and we click save, now it's gone away because we don't have any balance. So if you were to be on the bank feed, oh shoot, hang on a second, I'm going to go to account settings. Yeah, see, this is why online is so slow, because it has to sort of reset everything. Turn classes back on. Click done. Any other questions? How you doing, Mark? Cool. All right. I will see you all in 3 minutes.
I also need a course in Zoom.
Ah, I know. It's,
This is my third time on Zoom.
oh, really? Oh, well, you're an expert now.
Oh, yeah, I'm an expert. Yeah, the other one was in the car going 70 miles an hour, trying to drive and have my wife look at Zoom.
Oh, my goodness.
So-
Wow.
So,
Hmm.
so everybody disappeared from the screen except you and I, and now she just came on. How do you get
So
off
there's,
the screen?
well, there's a toolbar, which
I got
where
it.
it says mute, stop video.
Right.
So if you click on stop video, then we can't see you anymore. So if
Ah,
you step away, then
I
nobody
got you.
knows.
I got you. Now I see.
Yeah.
it. I was afraid to push any buttons while I was on here for fear I might disconnect. So,
No problem.
Mark, you can also chat from that bottom toolbar too, like if you wanted to put a question in the chat box.
oh yeah.
So, or if you go, I think under the more, there should be at the very right side, there's more with 3 dots. And there'll be a chat there.
I have a bar at the bottom of my
Yeah,
screen.
I have that bar also.
Okay.
I'll get used to it.
Yeah. I know, just in time to get, now things are starting to open up and people are having in-person meetings. How's Texas doing?
Yeah, I'm retired, so I don't work. No Zoom meetings anymore.
Well, except for your business, you're going to, it sounds like you're going to farmers markets once a week.
Yeah, but even that, there's no Zoom, but you know, we're 105 miles from the farmer's market.
Holy smokes. Although it's probably what, a 50-minute drive?
An hour and 45 minute.
Really? I
Yeah.
figured you could be driving like 100 miles an hour or something.
No.
No.
We live out here by choice, so
Yeah.
everything's a inconvenience per se. Groceries, even gas. It's
Yeah.
25 miles away. So.
Yep. All right. Well, I'm going to go ahead and get started. I know folks have their cameras off, so I'm not sure who's actually back. But I think we'll go ahead and get started again, if that's okay with you, Kara. Oh, Greg's
Yes,
back.
please.
John's back too. Perfect. Great. Becky, are you there? Okay. So we're going to talk about now cash inflows and sales and revenue. And there are 3 ways that we can do this. We can do this with deposits, with invoices, and sales receipts. So deposits are things that just go straight into the bank. In the deposit window and that functionality, you can enter in the general categories, but not details. So for example, you can enter in farm stand sales, but you can't specify that you sold kale and eggs and tomatoes and basil and lavender.
Right.
If you create a sales receipt, it also goes straight into the bank, but you can detail out the things of like, you know, how many bunches of kale did you sell or how many dozens of eggs. For invoices, the payment comes later. So, you know, you sell wholesale, you go to a restaurant and you say, you know, pay me in 30 days. And the invoice allows you to record, you know, how many bunches of kale and how many dozens of eggs you sold. And the invoice functionality allows you to track who owes you money, which is really important. So likewise, you know, we talked about the bill function, that if you enter a bill, you must pay a bill. And similarly, if you create an invoice, you must receive a payment. And you don't want to click on receive payment unless there's an invoice associated with it. So you may go to the mailbox and you may have a fistful of checks in the mailbox, And it's really tempting to say receive payment, but the receive payment only works in conjunction with invoices. And if you're not creating an invoice, you can just record the deposit. So let's go ahead and so I'm going to actually do an invoice in the desktop version just because it's a little bit easier because it's actually a farm business. So we can go to customers and create invoices. Oops, come on. Oh, shoot, sorry. I'm going to go back to the home page. We can also go here to create an invoice. And I'm going to create an invoice for KS Food and Drink. And I can specify, you know, broccolini. This Q right here, that Q is quantity. So I'm going to say I sold, you know, 20 pounds of broccolini at $5 a pound. I sold eggplant or edamame, and sold 12 pounds of edamame. So I can specify what I've sold. And we're going to talk about items. These are items right here. And I can click save. And I can then see customers and receivables, AR aging summary report. I can see that KC Food and Drink owes me $157. So I can keep track of what invoices are outstanding. And I still have a few other outstanding invoices that I'll need to collect on. But I can see that KS Food and Drink. If I go to my balance sheet, I can see that I have my accounts receivable. So I can see, you know, I'm owed $1,500 according to my AR aging summary report. And I can also see on my balance sheet that I'm owed $1,500. When I get the check from KS Food and Drink, I can go to customers. I can go to receive payment. And I can say the customer is KS Food and Drink. They owe me $157. The amount that I received from them is $157. I'm going to apply it to this invoice. And I can group it with other undeposited funds, meaning I still have it in my hand. It hasn't gone to the bank yet. Or, you know, if you're going to use your mobile deposit app and you just take the check and you just sort of, do you all do mobile deposit? Yeah. So you can just say deposit it directly to, you know, my checking account. So you can just record the payment. And by receiving the payment, QuickBooks now knows that you're not owed any more money. So your balance sheet, your accounts receivable has decreased, and that KC or KS Food and Drink is no longer on your outstanding invoices. So it's a nice way to keep track of who owes you and by how much. Is this making sense to folks?
It is. Could you do one in online and have it as if it was an invoice that we created in QuickBooks, and then we are just matching a deposited check that's coming through the banking tab?
Yep. Okay. This is going to be hard to mimic because I don't have like a real bank feed going on in QuickBooks. I only have a pretend bank feed. But you can create the invoice here, and oh goodness, how do I get out of this?
The bottom.
Okay. Oh my goodness. So here we put in the customer. So Diego Rodriguez, and the terms are going to be net 30 days. So this is going to sort of tell QuickBooks how far overdue it is. So if the invoice date is today of July 15th, it's due on this day. So when you're running your reports, you can see how far overdue an invoice is or not. Or it may be current. It's outstanding, but it's not overdue. That means it's current. So we can, what is called items in the desktop version is called products and services in QuickBooks. I mean, in the online version. So we did a landscaping installation. We did pest control. So these are sort of what we offer. And so we can have the invoice. We save our invoice. And then in our bank feed, we may see, you know, this deposit for $861, it wants to match it. So it may be matched to an invoice. So you'll want to kind of find the match. So you could
just do the matching if we're creating the invoice, and then let's say we send it to them and they pay online. Yeah. That's automatically matched, right?
Well, maybe, because let's go back to that invoice. So we'll go back to our invoices. So we had the you know, invoice for $85 from Diego Rodriguez, and let's say he paid online. You're only going to get $82, right? Because you're going to pay $3 in credit card fees. So when you go to receive payment, it's not going to be able to match it because your bank feed has $82 and this says $85. So this is where things get really wonky. So and this is what I wanted to talk about next week, but you can receive the payment, but I'm going to suggest that we deposit it into a new bank account, and it's going to be, you know, received funds. And I'm going to save and close. So when this comes through, you know, we've zeroed out the invoice. They paid the full $85. You're not getting the full $85. You're going to get $82, right? So, but we're depositing it into received funds, and we'll save and close. And then when the, and then when the deposit comes through on your bank feed, it's going to be a transfer. So instead of having this match an invoice, we're going to record it as a transfer, and it's coming from received funds. So we sort of take it in over here, like into PayPal, into a bucket over here, and then we're going to transfer it into our bank account. So we don't have to match the $82 with $85 and what were the credit card fees, and holy cow, I can't even keep straight. Okay. So we're going to get into more detail in this next week, but I wanted to call that out because you can only match if it's matched to the penny. And if it's not matched to the penny, then you're going to have issues.
So do you go back later though into received funds and then you're going to differentiate it, or?
No, I don't have to.
That's it.
Because
That's it.
Everything goes into received funds, and then anytime something shows up in my bank feed, it's a transfer from received funds into my bank account.
But then how will you match that received fund? What will you match it to?
I don't have to.
Because it'll be less.
So we matched it to the invoice when we deposited into received funds. That's when we match it. And then when it shows up in our bank feed, it's a transfer from received funds into the bank. There's nothing to match.
Oh, gotcha. Okay.
Yeah, this is
if you're taking the payment through QuickBooks.
Or another online payment if you use Stripe or Square, where you know your invoice is going to say $100 and what's going to land in your bank account is going to be $95. And
so are you counting that fee somewhere? Where are you counting the fee?
So what's going to happen is you're going to have, let's say, $100 left in received funds, as you know, after a month of collection of bank fees that were taken out. and you can write a check from received funds for bank fees to zero it out.
Okay.
Yeah, we'll talk about this again next week, because if you're not, I know John's dealing with this issue, and obviously you're also dealing with this issue. So I do want to go over it more methodically next time, to make sure that we don't lose everybody. So how are you doing, Frankie? Speaking of losing people, is this making sense to you?
It's been an issue, and I like your solution, but I think I need to like hear it a couple of more times and like see it be done again before it'll sink in properly.
No problem. No problem. Yeah, it's a brain twist. So, you know, we can receive CSA prepayments. We can do farmers market deposits, etc. So, you know, we can also just record a straight deposit. We can say, you know, we've got $500 in the bank account, and we have, thank you, Greg, bye. And we have $500 in revenue. Or we can say, it could also be a CSA prepayment, which is a liability. Again, it's going to be assets.
Looks like we've lost her.
Who did you lose me?
Julia, we lost you, but now you're back.
Oh, okay. Let's see. Let me make sure I'm still on the right network. Yep, I'm still on the right network. Okay. So when we sell wholesale, when we create an invoice, that's when the revenue shows up on our income statement, and we'll see the accounts receivable. And when we receive the payment, it's going to go from accounts receivable into undeposited funds. So undeposited funds is an account that's sort of locked by QuickBooks. So you'll see that when we go to customers, let's do it from the home screen. So when we go to receive payments, things want to go into undeposited funds. And this is an account that QuickBooks has created. And we saw that in the online version as well. And the problem with undeposited funds is that if I receive a payment, you know, so let's say D Restaurant owes me some money. Actually, no, maybe they don't. You know, we receive $100 from whoever, we group it with other undeposited funds. I'm going to click save. And when I go to banking and record deposit or make deposit, and, you know, I got that check from D Restaurant for $100, I can't change that to $90. It won't let me. So I have to deposit the whole thing in one lump sum. And this goes back to why I've created that received funds account, because we don't have to deposit things into our bank in one fell swoop. So whether it's a sales receipt or an invoice, a sales receipt gives you the option to deposit straight into your checking account or undeposited funds. We cannot break up that deposit. So if you go to a farmer's market, for example, and you know, you sell that baby arugula, you're selling 50 bunches of arugula, and you're selling the edamame, and you're selling 20 pounds of edamame. If you're at the farmer's market and you click on group with other undeposited funds, you can't deposit part of it into your bank account. Because, you know, let's be honest, you go to the farmer's market, you get some cash, you get some checks, you get some credit card, and it doesn't go into your bank in the same way. So this is why it's helpful to create that received funds account as a way. I think I called it, or you can deposit it into petty cash, whatever you want, so that you can break it up as it goes into the bank. So sales receipts are going to, when you get the cash straight away. Invoices are when the cash is received later, at a later time, and you can define the terms as to when you'll receive the payment. And, you know, if you just go straight to the bank, you can just say, you know, I'm going to the bank and I've got cash for, you know, CSA sales and I got $600. So you don't have to use the sales receipt or the invoice function. You can just use the deposit function to put money right into the bank.
For that example you were giving with the sales receipt at the market, was that for cash?
Well, see, that's the thing. It's like, you're gonna, like, you come back from the farmer's market and you want to track, like, I sold these 29 things at the farmer's market. You don't necessarily want to say farmer's market sales, right?
Right.
So you've tracked all these different things, but it's not going to go into your bank as neat and clean as, you know, it's not like $500 is going to go through credit cards and $95 is going to go through cash. It's going to, you know, be some messy configuration of it. Right. So this is, you know, I don't have an account here called received funds.
So that would be for both. And then it goes into received funds.
Yep.
And then say Square deposits come in as half that, and then your cash deposit the other half, and then you transfer it from received
funds. Yep.
Okay.
Yep. So that's sort of the workaround. The reason why I like the sales receipts and the invoices is that you're able to track specifically what you're selling. So when you run a report, you can do sales by item summary. And you can see I sold 50 units of broccolini or arugula. I sold 20 units of broccolini. I sold 32 units of edamame. So you can see by using the sales receipts, you can see, and sales receipts and invoices, you can see specifically what you sold, as opposed to if you just did make a deposit, just the straight deposit, all you see is, you know, farmer's market sales. You can't get the details of what you sold.
So in the, what was that? Items sale by summary that you were just showing?
Yep. So here's, you know,
will that bring in how you have your Square set up by items and sales?
Yep.
Okay.
So if your Square pulls all that information in, then you'll have that. And we can discuss this in your one-on-one coaching. We can take a look at your books to see how it's set up. But you can see in sales and customers, we can see sales by product and service summary. So here's that report. Mark?
Okay, well, and I guess I have the same questions as John. So all that information off my Square is going to come directly into QuickBooks then?
Yeah, I mean, you'll have to do some mapping. You'll have to map the QuickBooks items with the Square items.
Okay.
And there are online tutorials, and I actually have not done it physically myself. So, you know, maybe you and I, John, will get together and we'll learn it together, just so we can talk through it. I'd be happy to, you know, play around with you, because, you know, if you don't, this is one of those things, if you don't have a real Square account, it's really hard to simulate. So, so like I said, they're called items in the desktop version, so we can see the items list. And in the online version, it's products and services. And the items, oh, I think we've already talked about the bank feed. I did have some slides prepared about the bank feed. Okay, so Products and services are items. These are the specific things that you sell, and these are things that are entered in on the sales receipts and the invoices, and they are associated with an income account or an expense account. You can also use it to a balance sheet account. You can determine what account they're associated with. And it just gives you an extra level of detail to track that, you know, if you're using Google Sheets or Excel, you're going to sort of lose, it's going to be a lot harder to track all of that. So in the desktop version, this is an items list, and we can see what it is. So, you know, we have yellow wax beans. We can see the price. We can have the price set to $3 a pound. And then we can see where it's going to go. So every time I enter in yellow wax beans on a sales receipt or on an invoice, it's going to show up sort of nested within restaurant sales. So looking at your products and services list or your items list can be one of those ways to help clean up your QuickBooks. So where can you use items? You can use them on invoices. You can use them on sales receipts. You can use them on expenses and checks. You can use them on credit card charges. You cannot use them on deposits. So that's the one place that you cannot use items. So I just wanted to show you. So if we go to the COG, we can go to the products and services list. And it's not necessarily going to show, it's not going to show the income account right here. So, you know, we have the name of design, concrete, pump, whatever on the item list. So we need to show the income account. So we have to click on the little cog here, and we don't care about the SKU. We don't care about the type. I'm going to show more. I don't care about quantity on hand or reorder point, but I do want to see the income account or the expense account. So I do have to change that setting on that report. Oops. And then I need to make this wider. Oh, shoot, darn it. Ah, there we go. Okay, so you do need to make this adjustment in the online version. But you can see that every time, for example, you enter in Rock Fountain, it's going to go to sale of product income. And you can edit this. If you go through your items list, your products and services list, you can edit it and decide, you know what, I don't want it to go somewhere. I don't want it to go there. I want it to go to a different place, a different income account. So you can edit where things go to. You can create different income accounts to fit your needs. One way that this is a little bit wonky is, let's say you're creating a sales receipt. You've come back from the farmer's market, and you know, you sold all your items, and when you come home from the farmer's market, you automatically give the vendor $50, you know, the market fees for, you know, how many of you sell at farmers markets? So, you know, when do you pay your market fees?
Some at the market and some prior through an invoice.
Yeah. So you may want to have an expense under your products and services. So you might want to create a market fee as an expense. We're going to call it a service. And where it says income account, I'm going to make it an expense, you know, for bank charges, market fees. Even though it says income account, I can still actually make it a expense or something else. So I'm going to just call that bank charges for now. And so let's say I sold some fountains, or I did some installation, and I sold three of those, and then the market fees the total amount was negative 20. So the net amount is going to be 130. So we can even put in expenses into the sales receipts or the invoices if there's a discount, if there's a fee that you need to take out, or if you're refunding a deposit, if you already received a deposit, you can create a product or a service associated with that negative amount to bring the total amount due as 130, as opposed to what you actually sold of 150. Does that make sense?
Mm-hmm.
Mark? Good? Okay. Frankie, you're good? Excellent. The one thing I wanted to caution you against when you create your products and services, do not ever create an inventory product. Always create a non-inventory or a service. And the reason why you do not want to do an inventory product is that QuickBooks is going to start to track your inventory on the balance sheet. So every time you sell, a pound of apples, it's going to assume that the inventory came from your balance sheet. So it's just going to create a mess that you do not intend. So even though you might have apples and yarn and flowers in inventory, just select non-inventory part, because you're not going to want QuickBooks to track it for you. You're going to have a mess. And if you set up an inventory part, you can look at your income statement, or you can look at your balance sheet, and you'll see inventory assets, because QuickBooks is sort of tracking that for you. So this number could be a negative on your, how many of you are using items already? John or Frankie, Kara, you're using items. Do you have any inventory parts set up? Whew. Yes, yes. We have a win. So I just wanted to caution you against that, because that can really mess things up. So I'm just going to go here to items. In this version, it's called items. But you can go through your item list and make sure things are going to the right category. Now you'll see that, for example, we've got grocery store sales, we have restaurant sales. If you have different items that you're selling to different markets, you cannot have two accounts assigned to one item. So if you're selling bagged greens at restaurants as well, you're going to have to create a new item called bagged greens. I'm going to call this a non-inventory part, and I'm going to call it bagged greens restaurants. And this will then be tracked to restaurant sales. So now we've got, bagged greens, which go to restaurant sales, and we have bagged greens that go to grocery stores. So depending on, what kind of invoice you're creating, you can make it go to one or the other.
I've got a question about that. To track sales and, let's say, pounds that have been sold between restaurants, wholesale, and, let's say, market. Can you change, set them up as per pound and then just change the rates? I guess I've just been having issues compiling and having to change and figure out the
per pound or per bunch
Right.
conversions.
Because they're all coming in different ways. I think I can set it up so they're all the same.
Yeah, well, you don't have to define this. You don't have to define the units, and you don't have to define the price. So I can create a new item, and I can call it a non-inventory part, and I'm going to call it bubblegum, because and my bubblegum sales are all gonna go to agritourism income. And I don't define the item, I don't define the price, and I don't define the units here. And I'm gonna click OK. And so now when I create an invoice, I can, do bubblegum sales. Nothing populates in terms of the description or the rate. So I can say, oh, well, I sold, 20, and I can add to the description, packages. And I sold 20 packages at $1 per unit. So,
that makes sense. I just need to set it up in a consistent way then.
Yeah. The reason why you may or may not want to be consistent in the units is when you run the report sales by item summary. What's really helpful is that you can sort of see, how many units of arugula did I sell? So, if this number, if the 50 is consistent, that it's 50 pounds or 50 bunches every time, then you know that your average price was $10 per unit. This number may not be helpful for you if you use different units.
Right.
That said, if you know that 66% of your revenue came from arugula, whether it was 50 pounds or 50 bunches or 50 cases, you know that 60% of your revenue, 66.5 of your revenue came from arugula, and that might be helpful information next year. Whether or not you know the units, you know what percentage of revenue came from arugula. So I find this report extraordinarily helpful. And to me, this is sort of the value of tracking, using invoices and sales receipts to track this detail. And if you're already doing it in a Google Sheet, you can use a sales receipt to do that as well. So any questions about items or products and services? So we covered a lot today. We talked about the basic transactions in terms of cash inflows and cash outflows. We talked about writing checks, entering expenses, making credit card purchases, how to pay your credit card. In terms of receiving cash inflows, we talked about deposits, we talked about sales receipts and invoices, and then we talked about items and how to get that extra detail from the sales receipt and invoices to see, what you're tracking and where does it land. We also talked a little bit, we started to talk about some of the reports in the company and financial. We started looking at the profit and loss. We started to look at the balance sheet. We also discussed the AR aging summary report, where we can start to see, who owes us money. So we're starting to get a glimpse into some of the reports. One thing we actually didn't talk about, and I apologize for this, we did not really talk a lot about the chart of accounts. We sort of talked about the principles of it, but I wanted to just sort of show you real quick. You can see in this chart of accounts, you can see how things get nested underneath. So we can have farmers market sales, and then we can have, the 3 categories underneath it. And we can have the direct operating expenses, and we can open it up and we can see, these are the different expenses that I have under the direct operating. And, I may say, what, potting soil, that's not direct operating, that's, repairs and maintenance. I'm making shit up, but you can edit it. I can do, I can go to the pencil to edit it, and I can make this a sub account. I can change it to a sub account of general and admin, or I can change it to a sub account of, where's repairs and maintenance? Repairs and maintenance. So I can move it around as much as I want, depending on where I think it's going to be helpful. And I can say, what, I want to edit that back. I'm going to edit it. I'm going to move it back to direct operating because I think that was the right place to be. but you can move things around to make it the most helpful for you. Chemicals purchased is not a sub-account of anything. I can edit it and I can make it a sub-account of direct operating expenses. And now it's nested underneath direct operating. In the online version, we can go to our chart of accounts. And to edit, we need to go to that little triangle over there, where next to run report or view register. We can go here and we have the option of editing, and we can make the bank charges a sub-account of general and admin. And it's red because that doesn't exist. But we can make it a sub-account of another expense, commissions and fees, for examples. So we can make these edits to our chart of accounts, going next to that little triangle here to pull the menu to do edit. So whose brain is full? Yeah, we're kind of powering through these 3 sessions. So next week, sorry, what I wanted to do, go over here. Where are you guys? Okay, so
Julia, do you think you could take a minute at some point to tell people a little bit more about the resources you have on your website and what you think might be most useful to this group?
Sure.
Yeah.
Yep. Okay, so I just wanted to let you know that next time we're going to talk about the credit card charges. We've been alluding to it already today a few times, and we'll go into more detail. We'll talk about classes, and if we're feeling adventurous, we'll talk about general journal entries as well. And so I just wanted to, the Farmer's Office is my website. And so you all have a link to get a free month membership. So if you go to all courses, you can go, these 4 modules are sort of what we've covered very quickly. So if you go to the basic accounting module here, you'll be able to see, I talk about cash and accrual, I talk about the bucket, the balance sheet equation, depreciation, so you can sort of get an overview. The QuickBooks quick tips, so you can get sort of the quick nuggets of information here. So, entering sales and other cash flows, how do you enter in the purchase of a van? How do you record depreciation? How do you use items, journal entries, classes? So how do you do all those little things? You can sort of go through here. Some of the things that we're not going to get to is calculating the cost of production or cash flow projections. So you can watch tutorials on how to do those. If you go to the cash flow projections, as an example, there should be a template right here that you can download my cash flow projections template from my website under here. So you can follow along. And I think, so these are all the courses, and each course has back to course, there we go. So each course will have, anywhere from 4 to 10 little modules. So you can sort of take what you need at the pace that is helpful.
And so you said that people get a month free.
Yes.
Correct. And then what's the normal cost on your services there? I mean, just what's on your website? So
it's a $49 per month cost. And I mean, you all are already getting the coaching and the office hours, but I do offer office hours. So you're welcome to, if you've got questions, and honestly, I think this is the best part of this website services that I offer office hours. So if you want to just, I have a Zoom room and I'm going to hang out in my Zoom room next Wednesday, I think the 19th, and I'm going to just be there. And if you have questions and want to talk about anything, you're always welcome to join me and ask any questions that you have. And, you know, sometimes it's jumping and you can hear the challenges that other farmers are having. And sometimes, typically in the summertime, it's just one or two other farmers. So you can get an hour to yourself of coaching.
So we have a chat that says, how do I access this?
Oh, okay. So I sent you all a link. And the link is going to take you. So if you go to get membership, you want all access and register. And then, so the link in the email from last time will take you right here. And then you can enter in the, click here to enter your discount code. And I forget what it was, Texas NCAT, I think is your discount code. And you click apply. And then that'll be free for the month.
Cool.
Yeah.
That's awesome.
Yeah, happy to offer that. Any other questions?
Does everybody have their appointment made, Julia, for next week, or is that going well, or do we need to discuss that any further?